Welcome to the Idaho Business Podcast, the only Idaho podcast focused on providing profits for Idaho people. If you love our state and love small business, you are in the right place. We interview local legends, learn business, and have way too much fun doing it. You're listening to the Idaho Business Podcast with your friend, host, and all-around great guy and owner of New Clean Commercial Cleaning, Spencer Ward.
All right, everyone, welcome back to another episode of the Idaho Business Podcast. We are here with Daniel Packard with Cooper Norman, partner of Cooper Norman. This guy is legit. I'm telling you guys, he's not only a good friend of mine, but he knows his stuff. He's one of those accountants that doesn't take the business owner or the person out of the business. And he sees it all together collectively. And that's what you want. So Daniel, welcome to the show.
Thanks, Spencer. Appreciate being here.
Yeah. As always, we're sponsored by Sensations. These guys are based in Idaho, in Twin Falls and in Pocatello. If you go to one of their locations and say that you heard about them from the podcast, you'll get your first tanning for free. So go and do that. Dan, next time you get out in Pocatello, if you need a little color for Christmas, you know where to go.
Sounds great. Thank you.
Okay. Well, Dan, we've had a guest on just recently talking about, he actually is another podcast host. He's a host of Business Exits podcast. And he was talking about, we had an episode about exiting your business and what that kind of looks like. But as someone who really is in the forefront of it, you know, you're not just a CPA, but you're also a business advisor and you help with those mergers and acquisitions. What are some of maybe the three key things that you would advise people listening to do with their businesses starting now if they're thinking to sell within the next 3 to 5?
Yeah, so that's a good question. And quite honestly, I'd say the first thing you do is you be sensitive actually to the time frame that you've just outlined. Normally, the decision to transition or sell your business isn't something that happens within a single calendar year. It's something that you've probably likely either been contemplating or preparing for several years. 3 years, in my opinion, being kind of one of those minimum timeframes. Within that timeframe, Spencer, you know, it's important that business owners be sensitive to their gross revenues, be sensitive to operating expenses, be sensitive to those one-time and non-recurring sources of both income and causes of expense during that timeframe as well. Be sensitive to the type of potential acquirer that you're looking for. Great example would be is that, you know, more often than not, especially for small private businesses, these are transactions that are happening kind of peer to peer. Suppose that you're a physician, for example, it's likely that another physician is going to be buying you out. It's also likely that, you know, if you're a retailer, that it's likely that another retail outfit will be acquiring you, perhaps a larger one or just someone that's looking to take your footprint. So understanding who your buyer is important in setting the types of expectations that you have for yourself as well. You know, if again, each of those buyers are going to be capable of different types of structures and different types of acquisitions, different multiples. So I'm going to take what I just said and boil it down to that 2 to 3 things. Is number one, be sensitive to the time that it takes to, I think, acquaint yourself with the process and procure the documentation needed. Understand those one-time non-recurring things that are happening in your business. Strive for growth. And finally, be aware of who your potential buyer is. Have in mind who you have in mind.
I like that. I like that a lot. Do you feel like there's many business owners that you get involved with that just aren't organized and aren't just ready to sell, even though they think they're ready to sell?
Yeah, I think that, you know, oftentimes we'll operate our business, at least from a financial reporting perspective, sufficient just to get by. We'll say, okay, well, I got to file an income tax return, so I'll get my records kind of wrapped up and put together at the end of the year. I'll collect some receipts and send them in. But when you're buying or selling a business, you're held to a pretty high standard of quality and a high standard of financial representation. So, you know, business owners that are looking to sell need to understand that, you know, every number that's represented, every dollar of revenue and every expense that you're reporting to these potential buyers are going to scrutinize it. They're going to, you know, evaluate whether or not that's a legitimate source of revenue or a legitimate expense You can, I think, hedge really well against this by, taking serious the accounting function in your business and taking serious that reporting function, whether that be audits, reviews, or just tax preparation, understanding these are the first things that a buyer is going to ask for. Prior year tax returns, prior year financials, they're going to want to see a consistent narrative between all of those reports.
I like it. What would you say to the business owners that says, I'm writing everything off, and then when I go to sell, they'll understand that these are all write-offs for me, and they can add back those things, and then you'll see the profit, and carry the one, and then you do this over here. What do you say to those type of people?
Yeah, so it's kind of hard to have your cake and eat it too, right? Where you're saying, I'm going to write off everything I possibly can from a business perspective at every amount that's, permissible, by the IRS, and then turn around and try to represent to a buyer that those expenditures were not ordinary or normal in their course of your business. Those are hard arguments to make. Now, there is an exercise that a buyer and a seller will go through. It's called normalizing adjustments, where there's, I think, an acknowledgement from a buyer that the way that they operate your business will be different than how you did. Further, an acknowledgement that there are certain expenses that are just non-recurring in nature. Suppose that there was a flood, or that there was a very unexpected, let's say cancellation of a contract that you had invested a substantial amount into. Those would be considered, one-time and non-recurring in nature, and likely would be added back to your earnings for purposes of valuation. But that the limits of that will be tested. The buyer's always going to be, I think, scrutinous of any amount that you're trying to increase your earnings by.
I like that, because you hear it all. You're in the business world, and you hear so many different business owners. They think they have cracked the code and do it, and they've only cracked the code on their side to make themselves look good in the ways of the tax man, but they look horrible when it comes to, oh, someone wants to buy me. Okay, well, I need to start really adjusting how I do things.
That's right. And truthfully, that even can manifest itself, on a day-to-day operations as well, in the way of financing and your banking relationships as well. That, those write-offs that you're so passionate about at times can come at the expense of compromising a good lending position with a bank, or potentially, just like you've mentioned already, a good solid valuation that you want to seek upon transition.
Okay. What would you say, on average, when you see acquisitions, what goes for higher multiples? The type of business that's an owner absentee, a true owner absentee business that cash flows every month, or the one that the owner has to still be in there doing every single thing, or the wheels are going to fall off?
Right. There's certain industries, you're going to have a very hard time representing, an owner absentee model. I think the takeaway here is the wider or the bigger the buyer base is for your business, the higher the demand will be. So these owner absentee businesses are super attractive, because you can not only market just to those that would have to devote their time and energy to the business, but also to those that are saying, I got cash that's sitting around, I don't want to invest it, let's say, in other traditional investments. I'm looking for a private investment, to make that available for them and make it attractive, something they could actually participate in, is a big deal. So again, more people looking at your business, the higher the upward pressure will be on that value.
I like it. Well, perfect. When it comes to tax planning, we're coming to the end of the year. We'll kind of push the mergers and acquisitions off for a minute. I've been around many accountants in my life, and some accountants are, they're dart players. They're over there just kind of the end of the year. That's right there, and we'll call it a day. What's the difference? What's the true purpose of tax planning, instead of just coming to the end of the year saying, all right, what do I owe? Walk us through that.
Tax planning, I think, is helpful for just about anyone that is looking to reduce the amount of uncertainty that they have to face from a financial standpoint. If you really think about it, income taxes, or taxes in general, really do constitute most people's largest expense in their life. And there are so many people that leave that expense to chance, or just to an unknown, saying, gosh, it's October and I still haven't filed and I don't know what I'm going to owe. To leave something that substantial or that unknown, I think really not only compromises, I think, the mental well-being of most people, I think it's detrimental to self-employed individuals, particularly because of cash flow needs. If I'm thinking about my clients that engage in tax planning, again, most of them do. It's my preference that they do. The purpose of us is saying, this is where you're coming out right now. We can have an honest conversation about the performance of your business, which at times really is a non-tax conversation, but we can talk about the business, what were your goals achieved, and then from there discuss what are other things that can or should be done that will have influence on your liability. There's probably some listeners here that would say, gosh, my relationship with my CPA is, he or she prepares a tax return, I sign it, and that's it for the year. When quite honestly, conversations about business tax credits, R&D credits, work opportunity tax credits, or other deductions that they're possibly missing really just go unaddressed. And many of these, because there is a statute of limitation on our income tax returns, if you don't claim it, there are times you can just miss out on having that credit or that opportunity. Tax planning is a time when we can slow down, we can talk about what's going on, we can talk about the business owner, and I think really have true influence on a liability in a sustainable and a defensible way, instead of, like you said, throwing darts. I have one experience I want to share, if you don't mind, Spencer. I know we're probably a little low on time. When I was in college, I had a professor that the beginning of every class, he would tell a very ridiculous story about an individual. This individual lives on the hill, he's disabled, he loves to go to baseball games, he's self-employed. He would give me just a variety of facts about this person that seems in no way related to income tax planning. But we would spend hours diagnosing what potential tax strategies fit this person based on just random fact patterns and things that we just didn't know. Tax planning is a unique time where you can get to know a client, understand about their family, ask questions that you ordinarily wouldn't ask, and really widen the tax advantages or opportunities that are available to people. Because ultimately, income taxes are designed to socially engineer. They are designed to influence the taxpayer to behave a certain way. So if the taxpayer is behaving that way, gosh, be rewarded for it. Don't miss out on that. So anyway, just a thought that I
like that. I like that a lot. No, that's huge. That is very huge. Well, perfect. Well, Dan, thanks for coming on the show. I do want to end with one of the questions, but before I get to that, I always have to throw in one of our other sponsors. Is these guys are Fresh Prep. They're out of Pocatello. They service from Burley all the way to Idaho Falls, and they prepare healthy, great meals for you to substitute when you are throughout your busy day. These guys can deliver, or you have conveniently located pickup options throughout these cities. And if you go on to our website, click on go to the Idaho Business Podcast and click on their logo or name, you'll see the promo code that they have there. It's called Idaho Business. If you enter that into their website as you sign up, you will get your first meal for free and another meal to give to whoever you want. So there you go, guys. Go check out Fresh Prep today and get your healthy eating going on before the new year. So, Dan, speaking of all this financial stuff, is there a favorite book that you would recommend to business owners, or maybe a software that you would recommend to help them along their journey?
Yeah, that's a good question. Gosh, there's so many books out there these days, that can address business owners and how they work. I think some of the favorites that have been discussed amongst the business platform right now would be Ray Dalio's Principles. That's one that is, I think, frequently discussed amongst self-employed individuals. There's another book that I really enjoy called More Than You Know. It's about investment decisions that we make and the importance of making prudent investment decisions. From a software standpoint, self-employed individuals, if you're not utilizing QuickBooks, not utilizing an accounting platform to track your income and expenses, it's a unique time to consider doing that as you're coming into year end. Have a nice fresh start next year, being deliberate about categorizing your revenue and your expenses. Keep contemporaneous books. It's a good time to consider doing that this time of year.
I like it. Well, thank you, Dan. I appreciate it. Was there any questions I should have asked that I didn't?
I think you nailed it. If anyone has any other further questions, want to talk about transition or tax planning, they can reach me here at Cooper Norman, 208-523-0862.
Perfect. You heard it, guys. If you have any doubts in your accountant's ability, you need to go call Daniel Packard today. tell you, he has done wonders for me and my company, and he's continued to do that. So thanks again, Dan. And until next time, everyone, stay away from those negative Nancy's. Misery only loves company. Don't let people drag you down, and just go out and conquer your week. So adios. Thanks, Dan.
Thank you.
Congratulations on spending a couple of minutes getting a little bit smarter, having some fun, and supporting the Idaho business community. If you're feeling the love, make sure to subscribe, rate, and review on iTunes, Stitcher, or wherever you are.